Good morning, Paul Georgie from Allendale. It's Thursday morning, and we just got the numbers from the USDA on the weekly export sales. Corn trade was looking for 150 to 250, came in at 209. Soybeans 600 to 800 was the expectations, came in at 191. Very poor sales there compared to expectations. And wheat 300 to 500 was the expectation. 222,000 tons. So not very good export numbers according to trade estimates, and certainly not very good export numbers for this time of year. Overnight, we've seen some more follow-through buying in grains. Since this export news came out, the soybeans have backed off and moved near the unchanged area, but we've seen some strength here overnight, some follow-through buying, I think, ahead of the USDA report tomorrow morning at 7:30. Some of the influences here overnight around the world is the palm oil was lower. We've got the Dalian exchange, soybeans lower in China, so not getting any support from that part of the world. Also, China held their auction yesterday of 400,000 tons of reserve beans. They only sold 55,000 tons of those beans, so a pretty weak influence there. South Korea was in tendering for corn and wheat. Those tenders have been canceled. So the hopes of U.S. getting some of that demand have diminished here, at least initially, until we get the USDA report out and see what kind of levels we're at. The price relationships between South American corn and soybeans versus U.S. products is narrowing, however, but the advantage still goes to South America for the world buyers. So we've seen that that certainly could be the reason for these weak sales here this morning. Open interest jumps yesterday, and with the volatility that we've seen in the commodity markets yesterday, we've seen open interest jump the most in wheat, up 18,000 contracts, and a lot of that excitement could certainly be because of Australian wheat production. More reports are coming out now, putting that Australian wheat production at 20 million metric tons, or something just a bit less. The USDA was looking for about 23 million metric tons. So that's another number we're going to be looking for and watching closely tomorrow morning. Egg sets, as far as the poultry industry goes, declined 3%, indication of weaker placements because of high feed costs, more than likely. So the numbers tomorrow morning that you need to watch for, we believe, is the yield on soybeans. Trade estimates now, we're getting more numbers that are near 40 bushel an acre, which that'd be up almost 2 bushel an acre from what the USDA had last month, and that could give us a sizable production increase. However, we think most of any sizable increase in production will be offset by demand and keep our ending stocks very close to this 135 million bushel here in the U.S. Weather conditions in South America, Drew Lerner from World Weather Inc. thinks that the weather conditions there are improving and will continue to improve in that region over the next 10 to 15 days. Argentina drying out, and northern Brazil getting more rain should be beneficial for crop conditions there. The livestock market, we've seen technical and fund buying in the pork complex yesterday, running the December contract up sharply, limit up at one point in time, only to settle back off of that 50 cents or so. But the one of the fundamental reasons is the discount that December hogs had to the index, I think, was certainly supportive as well. The pork cutout values were up 67 cents yesterday. Cash hogs steady here this morning, looking for some direction there. We still got plenty of meat around to deal with, especially when we look at competition. We've got a lot of beef to move right now. The storm Sandy in the East Coast has caused some movement problems for beef especially, and we've also got the nor'eastern that's moving through that area again this weekend that is going to continue to hamper demand for meat in that region, which is a major part of our consumption of beef and pork. We're also going into a time period where turkey will take precedent over the beef and pork at the retail counter. That's slowing down some demand there as well, and that's causing packers to have to reduce their sale price. Cutout values and choice was up only 28 cents yesterday. Select was down 29. The cash cattle, we're hearing reports late yesterday of a 125 sale in Kansas, and we'll have to watch that to see if we can get more cattle sold at that area. A lot of ideas are that we could see the 124 to 125 here by the end of this week. Macro markets, I think, are going to continue to take precedent in this market after the USDA report on Friday. We'll monitor that very closely. This physical cliff that has been talked about on news programs is going to definitely impact trader attitude and investment attitude in commodities. So we'll watch that very closely. Stay in touch with Allendale's research, and we'll keep you informed the best we can. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning.